Hey, what's going on, guys? Bennie, founder of the Teach Me to Fish FX trading community, and I'm back with another video for you guys today. Uh, April 21st, 2020, a little after 6 p.m. Eastern Standard Time. Always remember that there are risks involved whenever trading Forex. With that being said, let's get into it. All right, guys, so I'm coming to you today with my screen, let you know what's going on, just to share a little bit of transparency with you guys. Let's go over here. Let me close this down. Let's close this down. As you see right now, I'm currently in a couple of trades. Okay, and I want to make sure that I am as transparent as possible. Okay, so you guys should always know that Forex is profitable. However, you do have those times where you have, my bad. Take a look down here. You guys see where currently in a deficit of $155, which is not bad because earlier today, let's see, I actually got in up here and I was in a deficit of 74 pips. Okay, and that was up based off of the first trade. And that first trade, I was pretty much in at $7 a pip, almost a standard, and so almost 10. So you can uh, know or notice that I was in a deficit of about $700. Okay. However, because I was preparing to do a video for you guys trading the market maker method. All right, and one thing you guys have to understand with the market maker's method is oftentimes you hear individuals tell you to wait for three pushes and then get in. There's push one, there's push two, there's push three, there's push four, there's push five, and here is push six. Okay, and this is what I want to get over to you guys who trade the market makers method. It is a minimum of three pushes. Okay, it is a minimum of three pushes. The market maker can do multiple pushes. Okay, they can do multiple pushes. That's why it's always important for us to wait for our entry rules to be met before we get into the trade. And that is exactly what I did here. My entry rules were met based on the entry rules that I formulated from the market makers method. Okay, I didn't take anything away from it, but I actually added in some extra confluences to make sure that I am in a higher uh, probable trade. Okay, but even though we do that, there is always a chance that they're going to do what they want to do. They're not going to follow their typical means of operation. Okay, and so we see here, and this is the most I've ever seen. Okay, not just today, but also in the past. I've seen them do up to six pushes. I've heard and seen other Forex videos where they've seen the market maker make like 8 or 9 pushes. All right, the most I've ever witnessed is six. Okay, and this is about the third time in my Forex trading career that this has happened. Okay, but what I did was to try to capitalize on my loss, all right, because I knew that this is actually pushing down into a higher time frame zone of accumulation and expecting for the market to turn around, okay, based on my 4 hour chart here. All right, with our market makers template, so we're waiting to get the signal on the 4 hour, but I dropped down to the 15 minute, again preparing to do a scalping video for you guys. All right, once my entry rules were met, okay, based on the workflow template, I got in, but the market maker was not done for the day because they were already into this higher time frame accumulation zone. okay, that I was waiting on them to be in. So again, when I got the signal, I got in. But again, they were not ready. They wanted to go deeper in the zone. Okay, that's what these magenta lines are. All right, these magenta lines are it outlines the accumulation zone that I marked up on the higher time frame. Okay, yeah, let's erase these. All right, and so to try to capitalize off of it, I dropped down to the 5 minute chart. Okay, here, let me try and blow this up. Okay, I dropped down to the 5 minute chart, and I got in, where was it? I think it was, if I'm not mis- I think it was somewhere over here. I think it was somewhere over here, if I'm not mistaken. But it had to be somewhere either at this point. I want to say this point, because this candle would have had to close, and there was no closing of the candle here. Okay, so I got in at this point. Okay, made a little bit money back, and then it retraced back on me, and that's what's going on now on the 15 minute chart. Okay, but it's pushing up, and I'm expecting for it to continue to push up. But more than likely, what's going to take place, because and this is the GBP USD. I apologize for not telling you guys what pair I'm working with right now. This is the GBP USD, okay, and the GBP USD is working on a midweek reversal. How do we know that? Hopefully you guys can hear me okay. All right. Um, you can go back and you can tell that you can go backwards. Here's one push. Here, let me make this a little thicker for you guys. Just a little thicker so you make sure you can see that. Oops. There's one push. Oh, that's too thick, right? Let's go there. All right. So there's one push. Okay. Here is a second push. Okay. Here is a third push. Here's a fourth push. All right. And this is our, what I call, peak formation high. I think other people may say high peak formation or whatever, but we have our M here. Okay. And then again, one push, two pushes, third push, and fourth push down here. So this is actually, it's actually four pushes, and we are inside again this higher time frame zone. Okay, accumulation zone. All right. Again, I always tell you guys, even with the market makers method, the market makers method is simply, just make sure, testing. All right, awesome. The market makers method is the very tip of the iceberg of what actually goes on. And I think, and I know that if you guys had the full knowledge of what actually goes on in the market, especially you guys who like to trade the market makers method, okay, you'll be able to trade it better. I promise you. The market only moves in two directions, okay, up and down. The market only has two destinations: accumulation, which is at the bottom of the chart, and distribution, which is at the top of the chart. And in between those 2 points, the market will make stops. Okay, their support and resistance stop, but we look at them at the teach me to fish as supply and demand stops. There's a difference. Okay. All right, there is, for me, I'll say this, for me, based on the research that I've done, based on the back testing that I've done, there's a difference between accumulation and distribution and supply and demand. Okay, so for me, supply and demand are just rest stops in between accumulation and distribution. Okay, and so again, the easiest way to see these zones, okay, you want to go to the 1 hour chart and you look for your pushes, all right? And your levels are nothing more than levels of consolidation mixed in with stop hunts, okay? All right, and they're very easy to spot out, okay? This actually, looking at this, we counted 1, 2, 3, 4, but there were actually five 5 pushes. GBP USD has given us 5 pushes. One, two. This is one whole level here. 3. All right, because it did break. Let's see. Let's see if we can do this. It did break this level. I'm not sure if. Okay. Yeah, it's not gonna let me move that. Let's just delete that. Well, I'll draw it with the MetaTrader. Okay. This level was broken here. Okay. This level back here, the second level, was actually broken here. Okay. It pushed down here. I count these the push downs as a break in the level two when it comes to the market maker, because these are simply stop hunts. All right, so these stop hunts equal will equal your level. But again, they broke this level here. Here, let me thicken this up for you guys, and I'll make this dark orange. Okay. All right. So this level here, they broke this level. You see that? So again, one, two. Okay. This is one. This was two. This is three down here. Let's do this. This would be considered three. All right. And I know that even this is helping you guys out, some of you guys out. Um, and then, of course, again, we had four. Okay. I'm sure it's never been taught to you, you market makers who you like to trade the market makers. It's never been taught to you like this. But if you look at it like this, you can easily find these levels. Okay. Um, Here, let's go. Well, I don't want to change it because I don't want to close that. So uh, again, this is what I'm working with. Okay. And so because it's again it's working on that midweek reversal. Okay. I believe that the market, the GBP USD market will possibly come down to retest, this level here, the stop hunt that was produced there. Okay. Ironically, not really, but ironically, it it stop hunted on 1.225. Okay, which is a quarter point. All right. These are, and that's why I have this in the workflow trading system. All right, because the market makers they work on that too. At the beginning of the week, they started out at 1.25. I usually like to say 1.25. All right, they started out at 1.25 and they worked their way down 1.225. Okay, and just to show you guys, that should give us a total of 250 pips. Okay, so the GBP has moved a little more than 250 pips so far for the week. Okay, 255 pips is what the GBP moved this week. Okay, and so again, I'm expecting it to come down to retest this 1.225 area. Okay, again, it's inside a higher time frame and area of accumulation. Okay, and if you want to know exactly how I found that, then you're gonna have to head over to the teachmetofisheffects.com and sign up. Okay, I have to respect those individuals who have respected my time and also respect their time, who have invested in me teaching them my trading style. So, but again, it's in a higher time frame distribution area. Okay, the higher time frame. I'll go up to the 4 hour for you guys. It's showing that it's preparing to turn around. Okay, all right. It's overbought here. Okay, again, I see videos time after time. I consider individuals acquaintances in the Forex market and community. But I see them time and time again trying to sell you guys on the TDI, or trying to sell you on the RSI or the stochastics or an OBV oscillator, trying to sell you guys on the fact that once that indicator is overbought, then or oversold, then you need to enter into the trade, and that is not the case. Okay, it can be, this oscillator can go into overbought or oversold, and but the actual market itself is not ready, because this indicator is doing nothing but telling us what the market has told it. They're all lagging indicators, all right? And they should be used to only indicate to us when something has happened, all right? And so we're always behind on the market makers, all right? And so now I do have some tips and some tricks to kind of help us to be a step closer, but we're going to always be behind them because we don't work for them, okay? And so, again, we have to get out of the mindset of making the market do what we want it to do, and trying to make the market to respond to us, when in fact we need to respond and react to the market. Okay. So right now I'm at a deficit of $155.99, and before the evening is over, it's very possible that it may drop, but maybe we'll kind of get a V straight away. Okay, that's what they call these things, market makers. And one day I'm going to do a video, and I'm going to actually teach you guys the market makers method. All right, and I'm going to show you guys how to easily trade it. It's not something that I typically, look forward to trading, but I do these videos because it's kind of a easy foot in the door for you guys to kind of understand what's going on, and be profitable. And then if you want to be even more profitable, I teach you about accumulation and distribution. Okay. All right. So again, let me change this over. I'm expecting for it to possibly come down a little bit. Uh, so I'm expecting for it to come down here a little bit, and then possibly shoot up, um, and go from there. Okay, that's the hope anyway. I'm willing to allow the market to do that. Okay. Um, and give us this, possibly we can catch this run, a similar run to here. Okay. um, Potentially, and had I been watching this, trading this based on the market makers method, we are looking at a potential of 402 pips. Okay, 402 pips over 1, 2, 3, 4, 5 weeks. All right. So if you're trading at $1, that's an extra $402 within a month. If you're trading at a standard, that's an extra 4 grand, so on and so forth. All right. So hopefully we'll catch one of these. And I was simply, again, just trying to catch my 4 hour swing early. Okay. That's simply what I was doing, trying to catch my 4 hour swing early. And so we're going to allow the market to do what it does best, and that is to manipulate and fluctuate. All right. And so, again, that's why we practice proper account risk management, even though this is $7 and this is $3.50. Okay. As I tell my group, my initial lot size is going to always be at half of 1% of my account. Okay. And then if I see any other opportunities that I feel really good about, okay, then I will come in at half of that, half of 1%. All right. All right, and it should be actually, the professional term should be 5/1000ths of a percent, okay, or 5/1000ths of your account size. But just To simplify it, I say half of 1%. Okay. And then any trade after that, I'm going to come in at half of that. Okay. Because what I want to do is I want to be in no more than three trades, and I want the lot size for those three trades to equal no more than 1%. Okay. So that means that at 1%, all of those trades will have to equal about 1,000 pips in order for my account to be taken out. Okay, and so that's all it is. It's just proper account risk management. It's not a get rich quick scheme. We're just trying to make money, take care of our families, make some investments, and not to have to work on a 9 to 5. All right. So we're not trying to get rich. We're not trying to do all that. Not here at this channel anyway. All right. I'm not saying we're not trying to get rich. I don't mean that. But we're not promoting the get rich quick lifestyle, and just anyway. All right. To each his own. You do what you want with your own money, of course. So that is where I am today. I needed to do a video for you guys today. And again, I like to be as transparent as I possibly can to let you know that you will lose some. However, trading my method, you will definitely win a lot more than you lose. Okay. All right. So that's going to be it for me, guys. Again, always keep in mind the risks that are involved when trading Forex. And until next time, if you stay in God, you will stay in control. Happy Pip Fishing. Head over to the website, sign up on one of the very, very economical membership levels, either the Pro Trader or the Market Beater level. Okay, the difference in the two is Pro Trader, you're going to receive all of the training, access to the private Facebook group, as well as the pair watches, or you formerly known as trade alerts. All right, and with the Market Beater, you're going to get everything on the Pro Trader plus um, direct access to me. It's basically my mentorship program. Okay. All right, guys. So I do appreciate you guys. If you have not done so already, please subscribe to the channel. Click the bell notification so you can be notified the next time I go live or upload a video. You can also find me on Facebook. All right, facebook.com/the teach me to fish effects.com. You can find me on Instagram, instagram.com/the teach me to fish effects. All right, and Twitter /the teach me to fish effects. Okay. And correction, Facebook is facebook.com /the teach me to fish fx. All right. Again, I appreciate you guys so much. I hope you found some inspiration. I hope I was able to add some type of context to your trading. And as always, again, head over to the website, connect with us, and happy pip fishing. Bye bye.